Well, welcome to Quiver Financial's weekly market date. It is January 25th of 2025 already. Seems like it's flying by, folks. Well, lots going on in markets, kind of exciting. So you got the stock market, you got gold, you got oil, all kinds of things happen, and all the retail investors seem to be getting greedy and jumping in. So it raises a bigger question: is it time to get greedy, or should we be getting fearful? So this is this week's update for all of our Quiver clients and VIPs. We're going to cover a little bit about gold, like we've been talking about. Is it going higher? And what's going to happen next? Talk a little bit about oil and energy. It looked like they took a little pause from the rally this week. The stock market, well, hey, you know what? The bull is still in the house. However, but there is something I want you all to see that should help raise a little bit of caution. So bull's still in the house, but let's look at a few things. And then rates and REITs, well, you know, they behaved very nicely. What's next? Because I think interest rates are the big thing everybody should watch in 2025, because I do think interest rates are the dog that will end up wagging the tail of the stock market and other asset categories. And how they behave will also affect how we can allocate. So next week, we got something special for you. Next week, we want you to catch the next wave. I'm going to do a special piece on artificial intelligence versus quantum computing. We're going to talk about the top 5 quantum computing and AI stocks. Hard to get that quantum computing out of my mouth. So let's get into this week's review and update. Let's start with what I think is one of the most important things to watch this year is interest rates, because throughout the last 2 years, most of the pundits have gotten it wrong. We have been hypothecating for a while now that interest rates are trying to stay in this Goldilocks zone of between 3.5 to 4.5, or actually it could inch its way up to 5 on the 10-year U.S. Treasury yield. And you can see here, since the beginning of really into 2022, we have been in that range, and we've recently reached the high end of the range. We pointed this all out, and we were hoping that over the next few weeks, we'd see a little reprieve or pullback in interest rates. They reached 4.76 at the beginning of the year and now have subsided. Not much happened in the last week since this last chart. Rates behaved quite nicely. That's what we wanted to see. What we really need to see is a few weeks where we'd like to see rates wiggle their way back down towards 4.5% on the 10-year. If we can get back down towards 4.25%, then my confidence is going to increase significantly about our longer term thesis about this Goldilocks zone. So that's really, really important to see. That's something we're going to watch. I don't know if it's going to happen, but if it does, there will be things that we can act upon. We also had pointed out at the beginning of the year, we wanted to see how some of these traded REITs, like EPR properties, we wanted to see how they behaved as interest rates were pushing higher, because we were noticing a kind of a positive divergence that as rates were pushing higher in the first week of January, this traded REIT was holding its prior lows. And that was just a positive sign. And an update is this past week, the EPR has continued to look constructive. So this adds to my confidence level that maybe we do see the 10-year stay in this Goldilocks zone. I just feel that if people a lot smarter than me were thinking rates were going to get above 5% and sustain above 5%, I think they'd be running away from an asset like this, not towards it. So this is just something to continue to watch and see if it can help increase our confidence level about this Goldilocks zone within interest rates. Can we stay between 3.5% and let's say 5% for another year? Because if we can, it's great for our portfolios, because we can continue to hold some stuff that pays great dividends that you don't want to hold if interest rates get above 5%. One other one that we had pointed out is Annaly Capital. It's a mortgage REIT that can be very interest rate sensitive. We wanted to see it pivot off of 18. It did do that last week. And in the past week, it's really just kind of continued to improve upon that. So nothing really to report there. Interest rates, the REITs, they behave nicely. That's what we wanted to see. We'd like to see a continuance of that for at least the next month and a half. So I think patience will pay. Let's switch over to metals and energy because we talked a lot about that over the last few weeks. Energy has become a more important part of our portfolio as we've been building a position in there. The reason we were doing that is because we've been watching the price of oil over the last 2.5, 3 years just get compressed into this triangle pattern that we've talked about many, many, many times over the last decade. It's one of these patterns that if you get used to seeing, and in this case, the longer the compression takes, when you come out of that pattern, whether higher or lower, it can be a pretty violent move. And the textbook is that, let's say 65, 70% of the time, the resolution of this compression is in the direction that it started. So we're really watching oil prices because you can see here they started from a lower point and they compressed over years. So we really wanted to see how this resolved. And it's amazing that, Trump with drill, baby, that in an emphasis to bring energy prices down, that the week of the inauguration, the week after this guy takes control, prices springboard higher. And he even talked about it this past week, hey, Saudi Arabia, and, maybe we rounded up to $1 trillion and, raise, oil prices going up right after I come, not very nice. It was not very nice. So, even Trump talked about oil prices this past week. And what we want to see for our portfolios, and this is not great for inflation and it's not great for Trump's plan, but what we really want to see is within all this rhetoric, do oil prices just create kind of a little pendant? Can they stay above 80? Right? Can they bounce around in here? And what's happened in the last week since we showed this chart is, we've seen a pullback in oil. In this next week, what I want to see is that pullback done? Do we pivot higher from here, or do we do a deeper retrace? If this is a really bullish, like strong upward move, we should see a pivot higher sooner than later. The jury's still out. I'm not predicting which one is going to happen here. It's more important to watch which one happens and then act after that. So this is something to pay close attention to because in the next 2 weeks, we're going to have a lot more to talk about when it comes to oil prices. Because when it comes to the energy sector, over the last few weeks, we've been showing this longer term chart of how the energy sector has been bouncing off of this long-term support. And we're hoping this is the last time it bounces, because if we can break out over this resistance, which looks like it's happening, but it's going to take a few weeks. So it's going to take some patience here. But the energy sector this coming week, the same thing I'm looking for, like oil, is I'd like to see it pivot right around this level. On XLE, I'd like to see it pivot above 90. And if it does, then our confidence level can be supported. If we do a deeper retrace down to like 88 before we pivot higher, not horrible, but not as bullish. So what we don't want to see is we don't want to see a full retracement of this past rally. That's the last thing that we really want to see. If we want to continue to hold energy in our portfolio, the sooner this pivots higher, the better. So again, stay tuned because the next 3 weeks is going to be real crucial in determining what the longer term path is for some of these sectors in 2025. I'm going to switch up to gold. Here we have gold prices over the last, let's say year. I had been showing long-term charts of how we've been stair-stepping higher. The big question is, now that support looks like it's held, can we get above resistance? In this past week, really not much help happened in gold. We just have been bumping against that red dotted line. So more to come. Pop some popcorn, watch this, because what I want to see and what I'm interested in seeing is when and if we get above that red dotted line, does it start to turn into something like a parabolic move? Does it get a short squeeze, or does it just meander its way higher? That's really, really, it's something I want to see over the next few weeks. So I think this first quarter for a lot of our portfolio holdings, it's going to be a lot of fun to watch. In the equity world, we have been talking that, hey, stock market, the bull is still in control. However, keep in mind of where we are in the bigger cycles of things. We're pretty long in the tooth in this rally. We can keep going. The S&P 500 could go to 7,000. It's just when the next correction happens, the level of support from that level is pretty far low, because if this is a true 5-wave pattern, the next big bear market or the next big correction, whatever it may be, will probably get magnetized. The market probably gets magnetized. Where's my little, there we are. Gets magnetized back to this 4th wave low. So the further we get away from it, it becomes riskier, right? And one thing that kind of supports that we are in this 5th wave, because you don't see this in the 1st wave, is the fact that retail investors are all in right now. So everybody is now in, and I can see this. My friends, my family, the number of phone calls I'm getting from people asking me about stocks, which didn't happen 4 years ago, didn't happen 10 years ago, didn't happen in 2009. None of these people were calling then, but everybody's calling now, wondering, hey, what's the next NVIDIA? What's the next thing? So the question becomes, if Warren Buffett, if Sir John Templeton, if everybody's ever said, when everybody else is greedy, it's time to be fearful. And when everybody else is fearful, it's time to be greedy. I've got to pose that question out to all investors. So we want the stock market to keep going higher. Right now, there's nothing stopping it from happening. It's just, I always want to give everybody a little word of caution that when everybody's in, we're running out of buyers to keep pushing this thing higher. So just be aware that if you're jumping in the stock market today, you're jumping into the deep end, which is okay. Just make sure you have a life preserver or you have a boat nearby in case things change. So what we're watching in the short term is we're really watching this level of like 5,800. I feel like that's the line of demarcation right now. That if the S&P 500 continues to trade, in this past week, it traded perfectly fine above 5,800. If we stay above that level, bulls stay in control, and you can stay in equities. You can stay overweight equities. There's no reason to bet against them. So right now, that's great for everybody. So that's what we're going to continue to watch. Is, do we stay above that 5,800 level? And if we start to get higher, like to 6,200, 6,300, 6,400, we'll start to move that line of demarcation higher. So be more aware of catching the next correction earlier than most others would. So continue to stay tuned on that. Next week, catch the next wave. You're going to love this. We're going to talk a lot about all the hype around artificial intelligence, as well as quantum computing, what it is. What's the time frame? Is it something that we should see in the near future, or is it 20 years away? What's all this hype and discussion about? So let's wrap it up with that. To everybody, have a great end of January. And until next week, take care. Goodbye.